Hi guys, let's start our discussion with the first cost flow assumption model, that is first in, first out. As the title clearly suggests, whatever came first is assumed to be sold first, first in, first out. So you can see FIFO assumes that the earliest acquired inventory costs are the first to be transferred to the cost of goods sold. Means whatever came first is assumed to be sold first, so that cost is transferred to COGS, cost of goods sold. As a result, the ending inventory comprises the most recent cost approximating current replacement cost. So whatever is there in the closing stock, that is assumed to be from the latest ones, because you are selling first in, first out. So you are selling the first batches out first. So whatever is left is from the latest batches that reflect the latest cost prices. Correct? So the FIFO method yields the same ending inventory and cost of goods sold amounts whether a periodic model or a perpetual system is used. Sir, this is very important. I already told you, specific identification and FIFO, there is no difference between periodic and perpetual. But again, we will discuss that and we will do a problem, then you will understand why it is like that. So you can see there is this question, so there are three separate purchases, 5,000 units at 3, 2,500 units at 3.25 and 4,000 units at 3.5. 6,500 units were sold, 4,000 from batch 1 and 2,500 from batch 2. So what I did is I took the same numbers. First one, 5,000 units at $3 each. So 5,000 units at $3 each. Then second one, 2,500 units at 3.25, 2,500 at 3.25 and 4,000 units at 3.5, 4,000 units at 3.5. I took some different dates and just took the same units and the same rates. Then a total of 6,500 units were sold. Total 6,500 units were sold. 4,000 units from batch 1 and 2,500 units from batch 2. 4,000 from batch 1, 2,500 from batch 2. Let's not worry about it. What I'll do is, since this is from batch 1, I will put it here. And since this is from batch 2, I'll put it here and I'll replace the dates. So this I'll keep it as 7th Jan and this I'll make it as 12th Jan. Okay, just to keep it in the same chronological order. So you can see first we purchased 5,000 units, then we sold 4,000 units. Whatever may be the sales rate, we don't really worry about the sales rate, sales price. And again we bought in 2,500, again we sold 2,500, then again we purchased 4,000 units. So if I see the total closing stock, 5,000 units purchased, 4,000 sold, so 1,000 is there. 2,500 purchased, 2,500 sold, still 1,000 is there. Again 4,000 purchased, so total 5,000 units are there, matching. So my closing stock is what? 5,000 units. Come on. All right, so 5,000 units are there in the closing stock. So now let's deal with this question. This will be the same question. What I'll do is this same single question I'll solve in FIFO periodic, FIFO perpetual, weighted average periodic, weighted average perpetual, LIFO periodic, LIFO perpetual. So total in 6 models we will solve the same scenario. Okay, I'll call it scenario 1 because I also want to do one more question so that you guys can get a better understanding and a practical experience. So I'll leave it 2 questions for you. One is scenario 1, sorry. Okay, let's start with first FIFO periodic. So what is periodic? Periodic means we only calculate at the end of the period. At the end of the period, we don't update after each transaction. I hope you remember that. Correct? All right. So for FIFO periodic, first what we will do is total purchases. What is the total purchases made? Units or total available. What are the total available units? So 5,000 purchases plus 2,500 purchases plus 4,000 purchases. So total available units are 11,500. Are you with me? Sir, if there is any beginning stock, opening stock is there, that also will be added because that is also available for sale. Na? Total available for sale, I'll call it like that only so it will be more clear for you all. Total available for sale is 11,500. Okay, units sold. So how many units are sold? 4,000 and 2,500, total 6,500 units are sold. Then closing stock. What is the closing stock? Out of 11,500 we sold 6,500, so closing stock is 5,000 units. We already calculated it here, but still again I am recalculating for confirmation purpose. Till here no questions, I believe. All okay? I am assuming this is fine for you. Is that okay? Can I continue? All right. So we total purchased 11,500, sold total 6,500. Sir, I am not looking at each transaction at this point. This is periodic model. In periodic, we don't worry about each transaction. We don't update after each transaction. We just go with the totals at the end of the period. Okay. So chalo. Now calculation. Very simple, straightforward. Don't worry too much. Don't get any confusion on all that stuff. Which model are we following? First in, first out. FIFO, first in, first out, correct? So whatever came first, that is assumed to be sold first. Agree with me? Whatever came in, that is assumed to be sold first. So in this 4,000 units, whatever came first, 5,000 came first, so that out of this 5,000, this 4,000 is assumed to be sold. Do you agree with me? Whatever came, this 4,000 units are completely sold from this 5,000 only. Still how many are left? 1,000 units are left. Then again we purchased 2,500. So 1,000 from previous batch plus 2,500 new batch. Total 3,500 are there. Out of that 3,500 we are selling 2,500. Now pay attention. So here what will happen is 1,000 will be sold from batch 1, 1,500 will be sold from batch 2. Sir, what? 1,000 are assumed to 1,000 are sold from this batch, because out of 5,000 we sold only 4,000. So batch 1 there are still 1,000 units left here. So when you sold this 25, first in first out, so whatever is first left in batch 1, that 1,000 has to be sold. Then the remaining units has to be taken from batch 2. Each purchase is considered as a new batch. Okay, so this is batch 1, this is batch 2. I hope you are following me now. So I'll just call it here batch. So this will be B1, this is B2, and this is batch 3. All right, I hope this is okay for you all. All right, so first let's calculate cost of goods sold. What is the cost of goods sold? All right, sir, now I am giving you easy method first, then I'll give you a more detailed one. So first we are doing periodic method, so let's go with periodic based calculation. Periodic, what we do, we calculate at the end of the period, correct? Okay, sir, how many units are left in your closing stock? 5,000. Out of that, how many are available from the last batch? 4,000. Means from this batch another 1,000 is available. Is that confusing? Is that confusing or not? Okay, let me rephrase. So total how many closing stock is there? 5,000. Out of that, last batch, batch 3, 4,000, we did not sell anything after that. So this entire 4,000 units are in the stock only. And total 5,000, 4,000 are from batch 3. That means remaining 1,000 are from batch 2. First in, first out. Now whatever came first, they are sold first. So whatever is purchased at the last, that is remaining. Okay. So now we have to calculate two things. What are those two things? Cost of goods sold and closing stock. Stick with me, ma'am. Please stick with me. Cost of goods sold and closing stock. Units, amount. Sir, I cannot take rate here because each batch has a different rate. So you don't know the rate. So I'll show you how the calculation is done. Okay. So first, cost of goods sold. How many units are sold? 6,500 units. Sir, how do you know? Already we have it here. 6,500 is the cost of is the total number of units that are sold. So here, how do I calculate the cost of this goods that are sold? So first, let's do batch by batch. Batch by batch. Pay attention. So first in, first out. So this 6,500 units we are assuming to be sold from first batch, remaining from second batch, remaining from third batch, like that. So total how many units? 65. First batch, how many units we purchased? 5,000 units. At what rate? At $3 each. That is from batch 1. Sir, still how many units are there? Total 6,500. You purchased 5,000 in batch 1. So 65 minus 5. 1,500 units are left. Are you with me? So 1,500 into batch 2 rate, that is 3.25. Sir, batch 2 2,500 is there, but we only need 1,500. So from batch 2 we'll take 1,500, and with that we'll get the cost of goods sold. Does that make sense, or is it confusing? It might be slightly confusing. First in, first out. So batch by batch we have to calculate the cost. So in case if somebody is confused, let me do it here. So batch 1, how many units are there? 5,000 units. And batch 2, remaining 1,500 units are taken. Okay. All right. So if I also take the rate here, then I can do like this, because now I have the batches bifurcated for you. I can take the totals also. So for batch 1 rate is 3, for batch 2 rate is 3.25. So the amount, if I calculate, now let me delete this here, and here if I just put the amount and then take the total. Okay, I think that looks good. This is for cost of goods sold. So total 6,500 units we have taken first. Okay, total 6,500. First batch 5,000. Whatever is remaining is taken from second batch. Okay. Next, closing stock. How many units are there in closing stock? 5,000 units are there in closing stock. So now, out of this 5,000, batch 2 1,500 is sold. So 1,000 is there in batch 2, 4,000 is there from batch 3. So we will take that. Actually, I'll just copy this, paste it here, then change this to batch 2 and change this to batch 3. So for batch 2 we have 2,500 minus 1,500 is already sold. So 1,000 units will be there in batch 2. 4,000 units are there in batch 3. So total we have 5,000 units in the closing stock. And the rates for batch 2 we know 3.25 and batch 3 is 3.5. So total cost of goods sold and closing stock is there. So I'll keep here solution amount so cost of goods sold and closing stock, I need those two, and cost of goods sold is 19,875, closing stock is 17,250. Okay. I think that looks good. All right. So sir, FIFO periodic is fine enough. So at the end of the period, we calculate total cost of goods sold and total closing stock. So now let's do FIFO perpetual. Okay. So for that, what I'll do is I'll take the same table. Okay, stick with me, must stick with me. So FIFO periodic, I'll change this to FIFO perpetual, and then let's add cost of goods sold and closing stock. This might be a little not clumsy, but yeah, each row might have different sub rows or whatever you want to call it. Let's see how it pans out. So now let's start with the first one. We purchased 500 units at $3 each, so 15,000 is the total. At this time we are not selling anything, so COGS will be 0. It's just a purchase transaction. This is not a sales transaction, so COGS will be 0 for all purchase transactions. Okay, so closing stock, how many units do we have? 5,000 units at $3 each. So that 15,000 is still in the closing stock. After each transaction we are updating, after each transaction, so pay attention. Then we sold 4,000 units, so COGS will be 4,000 units. 4,000 units at what rate? This entire 4,000 is from first batch only, so $3 each. So COGS is 12,000. Closing stock, how many units are there in closing stock? So from batch 1, 5,000 minus 4,000. So since this is already a minus number, I'm just putting a plus here. Okay, 1,000 units are there, multiplied by $3 each. So sir, this 15,000 is now split into 12,000 and 3,000. 12,000 is cost of goods that are sold, 3,000 is cost of goods that are in the closing stock. With me now? Okay, then again we purchased some goods. That will not change the cost of goods sold. It's not a sale transaction. So now what is the closing stock? So closing stock is 1,000 units from batch 1, $3 each, plus this 2,500 units at 3.25. Are you with me? Sir, are you with me or not? Or alternatively, what I can do, I can just say 11,125, right? Remember that number, 11,125. So instead of doing like this, I can do, already we know the closing stock from the previous batch, previous transaction, plus now again we purchased 2,500 into 3.25. That also will give the same answer, 11,125. So I'll keep that. So previous closing stock 3,000 plus this batch whatever we purchased. So that is 11,125. Then again we sold 2,500. Sir, this 2,500 sales will come 1,000 from this closing stock and 1,500 from here. 1,000 from batch 1, 1,500 from batch 2. So pay attention. Is equal to 1,000 into 3 batch 1 plus 1,500 into batch 2 rate 3.25. Okay, so closing stock will be how much now? This batch is completely lapsed, that is 0. So now 2,500, sorry, how many units are there in closing stock? 1,000 units, no? Yeah, 1,000 units. 1,000 into 3.25, that is 3,250. Then again we purchased, so previous closing stock plus current number of units into 3,250. All right, so let's calculate the total. COGS total is how much? 19,875, and closing stock latest one 17,250. Okay, all right, let's check this. Copy here, paste it here. Cost of goods sold is how much? 19,875, and closing stock is 17,250. Let's see if that matched with the periodic method or not. See, that's what I told you. FIFO periodic and FIFO perpetual will give you same answer. There is no difference. Okay, see, 19,875, 19,875, 17,250, 17,250. So FIFO periodic and FIFO perpetual will not have any differences. They are both the same. That's what is written in your material. See here, the FIFO method yields the same ending inventory and the same cost of goods sold amounts whether a periodic model or a perpetual inventory system is used. It doesn't really matter if it's periodic or perpetual, you will get the same values. Alright, chalo. Sir, you can see I struck off the entire solution because as I mentioned earlier, there were some calculation issues with the solution. It was, I updated the question, but I forgot to update the solution part. Remaining 2000 units is shown, but actually closing stock is 5000. So that is why that solution is incorrect. So you can ignore this. I will update that. I actually already updated that in the next version of the material. So if you are using the latest version of the material, no problem. All right. Chalo. In case if you somehow you are from the first batch of students and you have the old version of the material, please make sure you follow the solutions from the Excel spreadsheet. Right. I hope you already have the Excel spreadsheet access. If not, immediately text me on WhatsApp to get this. It's already too late, but if in case still you are sitting there and wondering where is this Excel file, text me on WhatsApp. I'll share you the link. You should already have it from the Google Drive link, but whatever. All right. Chalo. So with that, I'll wind up the first lecture from the cost flow assumption models. FIFO model is completed. In the next video, we'll talk about weighted average and then followed by last in first out. All right, guys. I'll see you in the next video. Until then, keep smiling. Take care. Bye-bye.